on the charts for you, Pete. I thought I'd actually show you what's going on over my right-hand shoulder again, and that is actually the PMIs. So that's Purchasing Managers Index for both our services, which is the one at the top, and also our manufacturing. And you can see that orange dotted line, if it's above that, it's expanding. If it's below that, it's contracting. And we had a record all-time low in the services number at 19.6, so 30.4 points away from expansion. It will bounce back today, and that was the April number. That was when we were at the height of what was going on inside COVID-19. But what's actually starting to become more and more interesting over the last week or so is that weekly data from the ABS is actually showing that we're getting stronger faster than we'd expected. And maybe the PMIs from both the manufacturing and services side today actually showed a better than expected read for May. The expectation is particularly for new orders to actually really start to step up. It would be a very big positive. It would, probably confirm what both the Prime Minister and the RBA is starting to suggest, which is that we're getting through this and that we're actually starting to see signs that the turnaround is starting to begin.
Okay, well, on that, the RBA Governor is due to speak today about matters of the economy, and I guess the question remains, has enough been done?
He will always be asked that question, and there will always be questions whether or not what happened last year before pre-COVID stuff happened with cutting rates 3 times last year was the right thing to do. So obviously he was at the time looking at the forward expectation around employment. It wasn't getting to the level that they believed it needed to do, and they cut rates 3 times, which possibly the argument put at him is that they left the cupboard bare. He has done everything that they can in terms of where we currently sit. They have and will not touch interest rates now for the foreseeable future. They've made big arguments about not ever putting our rates, unlike what's going on in somewhere like Europe or in Japan, where they've got negative rates, and even the UK is looking at it too. They won't do that here. It's more about what they're doing in the bond market. It's doing the right thing in terms of what they want to do. The question he's going to get today is whether or not he has to start propping up corporate debt. So whether or not he goes into the private corporate debt market and doing that. So far, they've resisted that call, but he will be pushed on that today. And it's certainly a question that maybe that's the next step to asking that little bit more that might need to have to come from the RBA.
Okay, Evan, when you're looking at the markets over in the US, they're at, a 3-month high at the moment. You've got the ASX, which certainly appears to be punching through the problems of what's happened in recent times out of China. I mean, is the worst over?
It's always an interesting question, because you'd have to probably put it down to the fact that there are still serious risks ahead. As you just pointed out, the Chinese trade tensions clearly are there, but as you can see over my left shoulder, it's very clearly that the markets are up. The Nasdaq's actually now not only positive for the year, but it's only about 2% away from a record all-time high, and that's because places like Facebook, Amazon, and Google are absolutely booming over there. What I would say, though, is that, again, what's happening in the actual earnings of companies isn't great. And if anything, it's starting to contract away. We haven't actually seen an earnings cycle yet with COVID-19 fully priced in. And that, I think, may be the risk ahead. So, yes, it's great to see some stabilisation. Yes, it's good to see that the volatility that we saw at the end of March, start of April has gone. But there is still some big events to actually digest about how companies are getting through this, because we're not through it yet, are getting through this. And that, I think, might be what happens when you actually start to get a full understanding of where the markets need to start pricing for the foreseeable future.
Well, and I mean, that's why people are suggesting, more and more critics are suggesting at the moment, Evan, that, it's a false economy that we're living in at the moment. And
yes. Look, I understand that point of view. It is and it isn't. I mean, the other argument that comes to it is that we are having a scenario where what will probably happen in the post-COVID-19 world about that economy question is that we have to, as a group of people, as nations, as globes, understand that the state is going to be more and more involved in our everyday finances. So something like JobKeeper is the biggest state intervention that we've basically seen in this country, and programs like that are likely to continue on. The question for the populace is whether or not we agree with that. And that, I think, is the way to answer that question, that false economy, because the government is basically propping up almost 1 in 2 in terms of where we currently sit. And that is the debate that I think I'll let you put to your political people that you have on your program about going forward, the intervention of the state in the economy going forward.